Hello, everyone. This is Terry with Futures.io, and as always, I would like to thank you for joining us today. It is my pleasure to welcome back Brett Steenbarger and Mike Bellafiore for today's webinar, How to Improve Your Trading. If you have a question, please feel free to type them into the questions box throughout the webinar, and we'll do our best to answer them at the end of the event. If you're watching us on YouTube, please do us a favor and give us a thumbs up if you enjoyed the webinar. And as always, please feel free to share, comment, and subscribe to the channel. It really helps us a lot. For trading news, events, and information, follow us on Facebook, YouTube, and Twitter using @Futures.io. And now, without further delay, I will hand it over to Brett and Mike, and y'all will get the pop-up again to share your screen. All right, looking good.
All right,
yours.
All right, great. You guys all set on you ready for us? Okay, sound check. Can everyone hear us? All right, good. All right, so I'm Mike Bellafiore. I'm the co-founder of S&B Capital. We are a proprietary trading desk in Midtown Manhattan, and I'm sitting across from Dr. Brett Steenbarger, who we call the best trading coach in the country. And we are very fortunate to be able to work with him and have him work with our traders. What we're going to present to you guys today is some ideas about how you can improve your trading in 2019. You're all sitting there, you want to get better. All right, well, how do you do it? There are ways to do it. There are correct ways to think about doing it, and there are goals that you can set that are well-meaning but not going to happen. And we want to, together, keep you away from that. So you're going to learn today some bad habits traders had in 2018. We're going to talk about some winning habits that worked well in 2018. We'll talk about how to build positive habits, how habits can change us. And I put this a mantra that I repeat to our guys here is effective best practices turned into habits that compound will drive your success or your improvement in 2019. So Dr. Steenbarger, you work with some of the biggest traders globally. What are some of the things that you saw in 2018 in terms of bad trader habits?
Yeah, thanks a lot, Mike. And thank you to all of you attending the webinar. It's a real honor to be able to share some ideas with you. You know, we often think of conviction as a positive thing in trading. We think of confidence, having confidence in views. And in fact, we have to have confidence in ourselves to be able to even think that we can outperform all the many other competitors in the financial marketplace. So we need a certain level of confidence, but sometimes conviction becomes overconfidence, and we get stuck, locked into certain views, and we stop processing what's happening with the actual market and what it's doing. So we need to have the confidence, the conviction to be able to put on risk, but we also need to be aware at all times what would tell me my idea is wrong. Just asking that question and having an answer shows a self-awareness that acts as a balance to that risk-taking, that confidence, that potential overconfidence. One of the things, Mike, that you and I were talking about when we were with the traders today is how many of our weaknesses, or our seeming weaknesses, are actually strengths that we have that we're overutilizing. And so this would be a great example. Confidence is a strength, but if we overutilize it, it can be overconfidence, and that gets us locked into bad trades. Another example of that would be we have some traders, Mike, who fall in this category. They're very competitive, right? And they see something and they want to go after it, and they're excited, and they trade it, and then they trade more of it, and then they trade more of it, and they put on another position, and pretty soon they're over trading. So what's happening in that situation is their excitement, their eagerness to win is used to an extreme and turns into the over trading. And so again, we need to balance that strength with another strength that tells us, what is the risk reward here? Maybe patience would be the balancing strength. Something that tells us that maybe the risk reward is not as good on the third attempt, fourth attempt, fifth attempt, sixth attempt. Yet another example is failing to adapt to market conditions. Look at that good-looking guy on the screen. Who's that big? Is there a reason they put you on there for failure to adapt to market conditions? Yeah. We're having fun here. So you know, again, we can end up becoming distracted. We can end up not recognizing that the market is not what it was. We've had some perfect examples recently when in stocks we've gone from a VIX of 10 to 15 or so to now easily 20 plus, and we were at 30 and more. So what was working in the lower volatility environment doesn't work in the higher volatility environment. We have to make some adjustments. So we have to keep updating how we trade for the market environment. It's easy to get locked into one way of trading because it's been working, and so we don't adapt to market conditions. And finally, an over focus on P&L. And again, that can come from being competitive and aggressive, but we become so focused on P&L that our psychology rises and falls as we make money and lose money. And so that's why I always emphasize with the people I work with that we need to have a life P&L outside of trading. In other words, if you're going to give yourself a P&L score for your relationships, if you're going to give yourself a P&L score for your personal life, for your physical fitness, all the areas of life that matter to you, that should have a P&L attached to it, so to speak. Because that way, if you have a full profitability in the other areas of your life, you're less likely to overreact to the P&L in your trading account.
I'd like to just add a couple of things, and my contribution will be what I see from traders on the desk and some solutions that you guys might take away. One of our best traders, if not our best trader, has this issue of being too convicted, and his trading is his nemesis. In his goals for the year, he didn't just identify that this was his number one issue. He did what champions do. He went the next step and he created best practices that he's going to work on and make into habit that are going to help him to not be as convicted while he's trading in real time. And you can see here the very tangible, specific things that he's going to do to thwart his convicted trading. Copy that. Over trading, here's some ideas that we work on from our desk to help you deal with the very real problem of over trading. We're working on adapting to markets here, elevated volatility. Dr. Steenbarger talks to our guys about when volatility gets above 15, start to look at market plays. When volatility gets above 20, I'm going to say to people, we'll make market plays. We're shifting our strategy because of market conditions. Certain strategies are not working as well. That's trading. And focus on your process. What is your process to achieve your goals? I work with one trader outside of the firm who is a multi-million-dollar trader, and he presented to me his goals for the year in 2019, and I can just tell you, they are striking in their detail. They're not a page. They're not just on trading. They're comprehensive. They encompass the entirety of what he wants to do and get better at as a person. They are specific in the types of trades that he makes money in, that have a name, that have a strategy, and how he's going to make more money in those very specific strategies. It's like he's running all these different divisions at a big company, and he's creating a business plan for those separate divisions to make more money. I see from some traders who aren't doing as well as they can, or not ready to do as well as they can, that they're not putting that detail, that thoughtfulness, that conscientiousness into tasks like their 2019 goals. And when I talk to this trader, he's focused on getting 1% better every day in everything he does. Trading is just another one of those things that he is excelling in. Shifting gears, winning habits, Dr. Steenbarger, that you saw that worked well in 2018.
Good. Well, just to reinforce the point that you make about the detail, Mike, that is so important. As we say, goals without plans are merely good intentions. So we want to not just formulate goals, we have to have specific plans to implement those goals. That's what gives that richness of detail with the trader that you're working with, Mike. So imagine I have a goal to lose weight, which I do. Now, I could write that down, and then during my meals, I could say, okay, I don't want to overeat, you know, that kind of thing. Or I could, let's say, join a meal plan. And the meal plan has set out a breakfast, a lunch, and a dinner with a set number of calories and balanced nutrition, and that's all I'm allowed to eat. So every single meal is totally controlled for nutrition and calories. So one guy has good intentions, one guy has a meal plan. Who's going to be more likely to lose the weight and lose it in the right way? It's that level of detail that really makes us achieve our goals. Okay, so winning habits that worked well in 2018. There are folks I've worked with who did well in 2018. So what are their best practices? What has worked for them? The first one we have is learning from peers and teams. And Mike, we're certainly seeing that among the traders here, where people are sharing ideas, people are going over their report cards together to review performance, they're giving each other ideas about how they've made improvements. And so that team approach, it may be a formal team, or you may just informally team up with a trading buddy. But that team approach gives you new ideas, but adds a layer of accountability. If you take on a role to make the other person better and they take on the role to make you better, now all of a sudden we have a new level of accountability. Plus we can learn from each other. The other area where working in a team fashion with others is that's been effective is in increasing our bandwidth. We can just see more opportunities. There are some traders I work with who get together before the trade. They're not part of a formal team. They just get together before the day's trading. They share the research they've gone over. They share what they've heard from others. They toss out different ideas. And everyone will utilize those ideas in different ways, but they've just increased each other's bandwidth. One person's talking about commodities, one person's talking about equities, one person's talking about the currency markets. And so they're starting to process all of that and come up with new thoughts.
So one of the areas that you saw as a winning habit was learning from stats and reviews. So specifically, we talked about trader view here. How are you seeing traders using stats and reviews to help their trading?
The statistics on our trading tell us what we're doing well and what we're not doing well much better than our informal memories. We have a memory of some winning trades, we have a memory of some losing trades, but the statistics really tell us, are our average winning trades greater than our average size of our losing trades? Do we have more winning trades than losing trades? For particular setups, are we profitable? Are we showing good risk-adjusted returns for each of these setups? Some setups are working, some aren't. The statistics can break that out for us, and TraderView is the platform here at SMB that's been helpful in that regard. And there are a wealth of statistics, for instance, the maximum favorable excursion to a trade and the maximum adverse excursion. So basically, how much, when you enter a position, how much average heat do you take on the trade? How much does it go in your favor? If your entry execution is good, you should have a maximum favorable excursion greater than your adverse excursion. We can measure all of those things. And once you've measured, then we can drill down to make improvements. So maybe for certain setups, your statistics are not so good. For other setups, the statistics are great. So we can drill down to the setups that aren't working so well, figure out how to tweak the trading of those. For the ones that are working well, maybe we can size them up. So the statistics can tell us all of that.
You know, this is a picture that reminds me to be quite humble in my job. It is a snapshot of humility reminder to me. This is a reminder of a story, and I think you guys know who this trader is. He traded a particular strategy. He had requested a meeting. So you said, hey, this helps traders understand better what traders are doing. Well, it also helps people who run firms understand what our traders are doing and allocate capital better to our traders, allow them to earn more capital better from our traders. And so this trader, you guys know, wanted more capital for a particular type of setup. And before this meeting, I got a heads up from our floor manager as to what it was going to be about. And admittedly, I wasn't psyched about going into this meeting and having this discussion about raising risk and buying power on this particular strategy, because I just didn't think it really had that much upside overall. Trader sits down, takes out his TraderView on his laptop, plops it down, right down there on the end, shows me his profitability in the strategy, and it is a perfect 10 equity curve that you want to see for a particular strategy.
I remember that.
And Carlton and I looked at each other and looked at it and looked at each other and looked at him, and there wasn't anything for us to do other than, yeah, we'll immediately give you more buying power for this particular strategy. And subsequently, the trader has gone on to do very well, building off of this particular strategy and trades like it.
But the big point there is, I mean, here you are, Mike. You're very hands-on in running this firm, and you're very aware of what goes on. But even with that awareness, we don't know the level of detail that the statistics capture.
I
was so surprised to you that the equity curve of the strategy was so good.
100%. It was eye-opening.
Yep.
And I was surprised to see the profitability in it.
Let me just give a quick analogy for listeners. So something like TraderView that captures the statistics on your trading, it's a little bit like working out with Fitbit. Okay? Now, when you work out with Fitbit, you get some information about how long were you spending in your target heart rate while you were doing the jogging. Well, there's no way you could know that. In fact, you could be jogging without any measurement, and you might think that you're in your target heart rate zone, and you never even reach that. So the device gives you the feedback that tells you, yes, you're in your target heart rate zone to increase your fitness, and you've spent X% of your time in your target zone. So now you've got that feedback, and you can work on improving the time spent in the target zone. That feedback helps you be more hands-on and specific in making improvements. It's the same way in trading as with the physical fitness.
All right, so one of the things you saw was successful as identifying and sticking to your edges. So what do you mean by that?
Well, knowing who we are and what our strengths are. It turns out that some traders, in fact, we were talking about this earlier today, Mike, with one of the folks here. Some traders are really good at getting a bigger picture idea and then developing some trades out of a bigger picture idea. Some traders will look at the moment-to-moment action. And they look at the buyers, the sellers, the bids and the offers, and they see from the bottom up, they see the patterns of activity, and they develop an idea out of that. So one type of person is top-down, the other is bottom-up. Some people, much more frequent in and out traders, they're very fast thinkers, pattern recognizers. Others are trading for positions. They're looking at a wider time scale. They're looking at other kinds of relationships. So it's a slower and broader type of thinking. And so knowing who we are is part of knowing our edge in markets, what we do well in markets. And being okay with that, accepting who we are and making the most of it without trying to get off in other areas that may not be our strengths.
I tweeted this yesterday. One of the better trader talks I heard was Ozark Trades at Traders for a Cause. And he talked about a yearly review that he did that made all the difference for him. And what he did is he went through all of his numbers and he found out what he traded well and identified what those setups were with the variables specifically, concretely understood where his money making was coming from, and did more of it, and did more of it bigger, and then dove deep into his numbers and figured out where he traded poorly, what he was trading poorly, and worked to eliminate that. And that helped him he was a profitable trader at the time, but that helped him from that place of profitability substantially improve his overall trading. And I think if you go to my Twitter feed, at Mike Bellafiore, there's a link to his talk. I should have put it in here, I didn't. But that's an example. And then, there's certainly lots and lots of retail and independent traders out there, and there are traders in our firm who have a lot of goodness in their trading. And they don't make enough of the goodness, and the badness or the lesser goodness overwhelms the goodness. And there really needs to be an understanding of what you do well, when you do well, why you do well, and when you do poorly, and what you do poorly, and smooth that all out. It's like you have a bunch of products that you're selling, and one of the products is just a loser, and the other one's a winner. You obviously want to sink more money into the winners. You're running a business, and part of the business is understanding how you make money. I'm going to take the next one if you don't mind.
I do not mind.
Collaborating with traders outside your network. So I wrote a piece on our blog at the end of the year talking about the things that I thought we did better here as coaches and mentors that led to some success. And one of the things I personally did, which I thought was my best decision of the year, was to collaborate with traders outside of the firm. And for the first time, I formally and daily coached a select number of seven-figure traders outside the firm. And some of them actually were not even U.S. equity traders. And the genesis of doing this was actually an exercise that Dr. Steenbarger started internally here, which we call the daily report card, where he suggested traders send him a daily report card and me, and we provided feedback to them, and that worked really well. In fact, I've called that the MVP in 2017 for our success that year, overall, my takeaway is we significantly outperformed that year. And a big driver of that was this daily report card exercise where guys were picking a goal, working on it intensively, giving themselves a grade for how they were doing, and getting better. And so what I did was I said to these guys, hey, send me a daily report card, and I'll give you some feedback. And in doing so, I learned a lot. I made some connections, which I was then able to share with some of the guys here to their betterment. There were some trade strategies that the guys who I'm coaching, I helped with, and then it helped me to be able to teach those strategies better because I was able to see the variables that were really most important for some of these strategies from working with these other traders. And so you want to put yourself out there. I know, Dr. Steenbarger, you do this really well. And I remember you saying this a long, long time ago, which is you reach out to people, and some of the people are not going to respond. And, fuck them, And some of the people are.
He's quoting me.
And I did not. That was not what you said. That was I'm not distributing that quote to you. And
no, it's fucking lofty.
No, but you put yourself out there and you reach out to other people, and some people are going to respond and become friends and colleagues, and some people aren't. The people that do become friends and colleagues impact your life very positively.
Yeah, if I could just add, and this is something I've written about on the blog, the Trader Feed blog that I write, and it's an idea that comes from psychology, and that is that everything we do and everyone we interact with is a kind of psychological mirror. In other words, we experience ourselves through our interactions with other people. That's why, for instance, being in an abusive relationship is so damaging, because we're experiencing ourselves in such a negative way. And over time, we internalize that negativity. If we're in a very good relationship and we experience ourselves as being loved and lovable, we internalize that feeling, and that stays with us. So when we reach out outside our network and we collaborate with passionate people, talented people, people who are making themselves better, that's a way we experience ourselves. That's a kind of mirror for our trading, and that becomes part of our identity. Associate, affiliate, reach out to quality people in any area of life. But in trading, you'll learn a lot, you'll give a lot, and you internalize a lot that's positive.
Pushing yourself outside your comfort zone. So this is a snapshot of a trader earning his black shirt. You get a black shirt at the firm for making $2 million net in P&L for the year. This is a trader who earned his black shirt by developing a niche and then responsibly and systematically trading that system bigger and bigger and bigger and bigger, going from $4,000 a month up to the amount of money you need to make $2 million net in a month. The best traders at the firm continually are doing this.
If you make $1 million, you get a black shirt. If you lose $1 million, you lose your shirt. This is how it works.
We found internally here, we pushed our top traders to express their trades with multiple products. For us, that means options. We are mostly an equities trading desk, and our floor manager pushed our top traders to express their edge with options as well. And we were actually just remarking on this today. We didn't have a trader who was negative, who was an equities trader, who was negative in their options account. And we've sort of stumbled across this real edge based on the way systems operate, that really works for us by expressing our edge in different products.
And let me just add, and that could be expressing with different strategies as well. So if there's some uncertainty about the global financial systems because of some problems going on in Europe with Brexit and with the dynamics in Italy, if there are some financial concerns globally, we could just short the stock market. We go short the S&P futures or the SPY, but we could express that as a trade short the financial ETF, so the XLF, and long some defensive ETF. So we've taken some of the market data out of the trade to express in a pure way the relative weakness that we think will be shown by the financial stock. So there's a different way of expressing a view that could give us a better risk-reward relationship.
Yeah, and it was a good thing we did. We pushed our top guys. Two of them, went from not making much in options to making over $1 million just in options, and that's on top of their equities trading. Another guy came real close to it. So keep pushing. And I know you want to talk a lot about this, Dr. Steenbarger, about building positive habits and how to go about doing that.
Yeah, and you've been doing some reading in this area also, Mike. Very, very important. The idea, and Mike mentioned it early on, is that you want to take the best of what you do. You want to take your successes, those best practices, and turn them into best processes. You want to turn them into positive habit patterns. One of the problems when people review their trading, let's say from 2018, is they come up with 10 different goals, 10 different things they want to change. And so they have some ideas for this and ideas for that, and pretty soon it's all over the place, and there's no focus. What the research in psychology shows is that if we have fewer goals that are very specific and concrete, that we work on with repetition, that we work on continually, we're much more likely to achieve our ends than if we try doing 10 things at one time. So the focus is important. The repetition is important. Doing something the same way every single day. And doing it with some urgency. The research suggests in psychology that we are most likely to make changes in our lives if we get outside our normal states of awareness. In our normal states of consciousness, our normal state of body, our normal state of mind, we tend to think normal things and do normal things. We do the same old stuff. We fall into the same patterns. We don't make changes if we stay in our usual mindsets and physical sets. So if we have some urgency, if we make something a priority, if I make a commitment to a trading buddy and they make a commitment to me, if I make a commitment, let's say, to my spouse at home, that here's the target I'm shooting for, and some of those profits we're going to use as a family vacation. Well, that all of a sudden gives a little bit of urgency, gives a new dimension to the goal and a new source of motivation to reach that goal. And the research in psychology says when we are in a different state, it could be from meditation, it could be from that sense of urgency and need, we're more likely to achieve our goals. And then finally, putting those goals, those processes into the calendar. Using the calendar to structure your daily processes. And so if something is an important part of your success in trading, it gets hardwired. You do it at a certain time each day so that it can truly become a habit. And using your calendar to guide you to do the right things, whether it's physical exercise in your personal life or whether it's the different preparation activities of trading, that keeps you on that path of focus and repetition.
Good book to help with this, Atomic Habits by James Clear. We gifted this to some guys on the desk. It certainly has encouraged guys to read that. Many of our traders have read this to help them put those best practices into habit. And I'm very curious to hear what you have to say with this, how habits change us.
Yeah, and the key principle is what we have up here. We internalize what we do. It's back to the idea of mirroring. That when we do something again and again and again and again, it truly becomes a part of us. And so we want to use that power of repetition to build our sense of identity, to make these activities truly part of us. So I have a routine each evening in which I go through the market action of the day and I update my research. I have different measures that I take a look at showing the strength or weakness of the market. And every single evening, I've done this for years, I'm collecting these data and then using them to formulate ideas. It's become a part of me. Once we internalize a good behavior, a best practice, we don't need motivation to do the right thing. It's part of us. I wake up in the morning. Whoever's awake at that time, I greet them, I say good morning, I give them a hug. If it's my cats, I give them some food and a hug. I do that every single morning. It's part of who I am. It wouldn't feel right. Do I have to motivate myself to say hi to people in the morning? Some days. Do I? On a remarkably consistent basis, I take showers every single day. Isn't that amazing? Isn't that amazing? I clean myself every single day. How could I be so motivated? Look at that consistency. Well, you do it again and again and again and again, and it becomes part of you.
All right, great. And contact information, please feel free to reach out. You can reach me there, and you can reach Dr. Steenbarger there.
Yes, and also I have an email address on the Trader Feed blog. It's all one word, Trader Feed, TraderFeed, traderfeed.blogspot.com.
All right, great. Happy to take questions from you guys.
Let's see what we have. How to get rid of the habit of moving the stop loss set for my trade. I'm trying to fight that ugly habit for 2 years already.
Mike? Yeah. Okay. A stop loss, we want to process, this is getting back to the idea of changes in state of consciousness and urgency. We want to process the stop loss as something positive we are doing for our account and for our trading career. If we view getting stopped out as quote unquote losing, well, most of us are competitive human beings. We don't want to feel like losers. So we might move that stop loss. We might ignore that stop loss. We want to get to the point where we are mentally rehearsing a mindset where a stop loss is a commitment to our trading success and our trading career. What that means in practice is that we cannot win the game if we don't stay in the game. The stop loss keeps us in the game. I'm committed to staying in the game. Over time, I'm going to find my edge. I'm going to find my success. But if I don't control my losses, then I won't stay in the game. So you're processing the stop loss as a commitment, not as a sign of failure. The other thing that's important that we talk about a lot with the guys, Mike, is those losing trades. If they're well thought of, well considered, losing trades give you some real information. I've had so many trades where I've said, okay, I think we should, we're in an uptrend. I think we should take out yesterday's high. And we move higher, and then it sells off. We move higher, it sells off. And it suddenly becomes apparent we can't take out yesterday's high. I try putting in a long trade, and it falls, and I get stopped out. And I say to myself, that shouldn't have happened. That was a good trade idea going along. Maybe this market is weaker than I realized. Maybe we won't take out yesterday's high, which means we could test yesterday's low. And sure enough, an even better trade idea on the short side comes up because I used the losing trade and getting stopped out as information. So the stop out becomes opportunity. If I move the stop, I just ruined an opportunity for a great trade. So it's how you emotionally process the stop out that dictates how you'll stick with it or move it.
Okay.
That's like Cal Prize. This man got a Cal Prize. Thank you.
Let's see. How often do your traders review their trades using Trade Review? Do you do manager team reviews?
It's a good question.
So we review our trades every day. We upload all of the trades that we make into Trade Review. It spits out stats. We keep a trading journal on there. Guys internally here also do a playbook trade. The second book I wrote is called The Playbook. This is a way for you to build your business. It's a way for you to take away a setup that made the most sense to you during a trading day. And so what you're doing is you are giving yourself a blueprint for trades that you can do really well with and you can build your business around. We, in terms of team meetings, we actually just had a series of them. That's what we did all day today. So all day today, Dr. Steenbarger and myself and our floor manager met with some of the teams together, and we went over their goals for 2019.
And typically, I'll look at their Trade Review stats on a monthly basis. You know, any individual day or two, you know, good things can be happening, bad things can be happening. So we look a month at a time, and these are reasonably active traders. So over the course of a month, you can see some meaningful statistics.
And I would say about our firm that the singular takeaway that you'll see from all of the traders top to bottom, guys who are making a ton of money, guys who are just coming up the curve, you know, even the guys who are making quite a bit of money, they're trying to get better every day. They are working actively, thoughtfully, consistently, excellently at improving.
And they bring in their stats and they're working their process. That's absolutely true. I have a new idea for Bella, a book for him to write. You ready for this? Yeah, he wrote the book, The Playbook. Well, let's write a book for people who move their stop losses, and we'll call it The Pray Book. That'd be pretty effective. I can get you a contract with Wiley.
Sure you can. Sure you could.
Any more questions? It's late for us.
How do y'all feel about taking...
So we start getting silly.
Yeah, I understand. How do you feel about taking vacations to get away from the market entirely, like for a week or etc.?
I love it. Love it, love it, love it. I am a firm believer in vacations. I think if you take the right kinds of vacations, not just, you know, time to vegetate, but where you go to new places, do new things, I think that can be tremendously renewing, energy giving. You come back with a fresh perspective. Does it have to be a week at a time? You know, I'm a big fan of just doing overnight trips and weekend trips. My wife and I do that often. I think you can get a lot of renewal going to the right types of places, doing the right types of things that way. But absolutely, I think, and we all talk on the trading floor, that trading has to fit into our lives. Our lives can't fit into trading, right? If our lives fit into trading, then markets are controlling us. That's a bad place to be psychologically. So when we take vacations, we're putting our life first. Trading fits into our life. And sometimes we get a little burned out. Sometimes we need a fresh perspective and we need a break. I think it's very healthy.
You guys are very jealous internally here of the next vacation that I'm going to be taking in the south of California, going to Legoland with a 5 and 3-year-old. But they're going to get over it, I think.
But he's not coming back because they're going to build a wall before he returns.
Let's see. I often don't pull the trigger on a setup. How can I correct this?
Yeah, I mean, that's somewhat common, and it's a form of what's called performance anxiety or performance pressure. Some public speakers have that, performing artists, where they get so caught up in concerns about the outcome of the performance that it affects the actual performing. It turns out that that's the major reasons why people have some sexual dysfunctions. If you get too caught up in the outcome, suddenly the process doesn't go so well. Anyway.
Can I ask you to, you're welcome to finish that up.
With a personal example.
Can I ask you to share that thought with the work we're doing with Ryan in terms of framing how you look at a challenge in terms of, instead of thinking of the pressure of it.
That's great.
Yeah, I thought that was one of the biggest takeaways from today. I think they would get a lot out of it.
Yeah, well, thanks for cueing that, because I think that was an important point. We were talking with a trader, and the point I was making is that sometimes we can change a pattern in our trading by reframing how we think about the trading. So if we're thinking about trading as risk and how much money I could lose, that makes it harder to pull the trigger, right? If I think of trading as opportunity, if I think of trading in terms of integrity, I've put in this work, I see this opportunity. If I don't express my view, I'm letting myself down. I'm letting my teammates down. One thing that I did early in my trading career is I purposely assigned a portion of my profits to a family fund for us to do fun things together, like vacations. And so that created a different motivation for my trading, because now I care about my family. I want to make sure I don't make stupid trades, but I also want to make sure that I don't fail to size up the genuine opportunities. So by tapping into a different motivation, we can avoid some of those performance pressures. I don't even like, in my own trading, to use the term risk. You know, I know how much I could lose if I'm stopped out. I make sure that that's doable. But I'm thinking about, here is an opportunity set. This would tell me it's becoming a better opportunity. This would tell me it's becoming less of an opportunity. And so my self-talk is not about risk and loss and failure and all those kinds of negative things that can lead to performance pressure.
Okay. Continuing that same kind of line of questions, what can I do to resist taking profits prematurely instead of waiting for my reason to exit to happen? How to stop premature exits.
So I'd like we're going to have to stop drinking over here.
Hey, this is coffee, man. You should see me while I'm drinking.
We have been known to have webinars where we do drink craft beer, but
that's true.
not tonight. But I like the phrase "reasons to exit," and I use this phrase in the second book I wrote, The Playbook, and I proposed it as a way for people to think about developing a system to exit their trades, to think about developing a system for them to exit their trades. And, so if you are in a scalp trade, you're going to have rules to exit. If you're in a swing trade, and what we say is the trade to hold, you're going to have reasons to exit. And when people say, well, how do I hold longer? What I suggest is you want to develop rules for how you're going to take your profits. And so specifically for us, we are going to have rules about taking profits such that we're not going to take all of our profits until it hits a target. We'll have a predetermined target. If it doesn't hit a target, I'm not going to sell. Or it breaks the uptrend. Or I see substantial new selling on the offer that I haven't seen the entire way up. Or there's some breaking news in the trade that's come out that makes the long different. Or it's now into a longer term technical resistance area that I've identified. Or it's now holding below a consolidation area that it hasn't on the way up. Or it's holding below VWAP. So I have very specific ideas, predetermined, about what's going to get me out of this trade. And so now it's not me thinking about not holding enough. It's about me executing on my system for how I'm going to, in a trade, take my profits. I find that people haven't developed those rules enough, and that's what gets them in trouble. And you don't have to be perfect with this. This is an evolving process. The idea is not to get this right the next trade you make. The idea is to get better at it. Just don't be so hard on yourself. Just get better at holding trades next time. Just get better at adhering to the rules that you've set and build from there.
Mike, if I could jump in with a little bit of a different perspective here. I think in some ways we should exit prematurely. I know our spouses might not like that, but I think that we should have multiple targets in many cases. In other words, if I see sellers come in and we're holding above a previous low point, we're holding support, and I start to see some buyers coming in, we should catch the previous high. That might be my first exit point, and I'll exit a portion of the position there. But I'm going to leave another clip on because I think there's some possibility we could break above that previous high. So I'm building some cash flow in the trade by being quote unquote premature, by taking some off early, and I'm leaving some on in case we get some range extension. And ask me, if the whole thing retraces, I still have taken my profit on that quote unquote premature clip. And particularly in choppy environments, that kind of multiple targeting and taking some profits quickly. There's one hedge fund manager I happen to work with that used to call it, make it, take it. At least with a portion of your position. Build your cash flow in the trade, because many times moves will reverse.
Yeah, and I think that's a nuance added to that system that you want to create. So lots of guys here are going to make cash flow on some of it and hold the rest until they have a reason to exit. All right.
Okay, I think this is going to be our last question. We're getting close to time. How do I manage, how do I keep from being too influenced by other people, media, news, etc., and focus on my own views of the market?
Well, we keep on, we keep on Fox News the entire time.
I thought it was MSNBC.
Oh, MSNBC, yeah.
Okay.
We had this conversation with the trader today who said that she said this is the very same thing that she had struggled with last year and wanted to get better at. And so, you know, there are people who are worthy of listening to, and then there's noise, and you want to sort of ferret that out.
You build your network. You know the people who do their homework, who are reliable. You consult with them. You reach out to them. They're part of your virtual team. But talking heads on TV, I'll just mention a brief example. I won't go into too much detail. Years ago, I was asked to be on a financial show on television. I won't say what it was. And I mentioned something about growing weakness in the market at that time that I was concerned about. They were recording this for future broadcasts. They stopped the recording. They said, no, we listeners want to hear something bullish. They want to hear something positive. You can't say that. What the you know what? Okay, so that is financial media. You know, you want to find talented traders who do their work, who know their stuff, and share ideas, and who make you better, and you can make them better. And that's the network you listen to, and everything else gets shut off.
I would say at the end of the day, you do want to have a system that works for you, and so you can bounce ideas off of other people. The best example I can sort of give for this is that the best trader at the firm runs a team, and everybody on his team is a profitable trader to varying degrees, obviously, and they all pretty much trade the same stocks, and they all pretty much trade the same direction, but they trade very differently. They trade uniquely. They're all talking back and forth with each other about strength and weakness in particular opportunities, but they're attacking the opportunity in a footprint that's best for their cognitive and their personality strengths, and they've developed a system to do so. And so at the end of the day, I personally love lots of information coming in. Some people don't. But you're trading your account. You're trading your account and your setups that are best for you.
Yeah, you want information coming in, not noise. And there's a lot of noise in social media, financial media. You want to open yourself to information. You want to shut off noise.
All right, we appreciate it.
Thank you.
Absolutely. Thank you both.
You got it. Train and trade well, everyone. Happy New Year.
You too. Thank you.
Okay. Thank you.